Hello and welcome back. It's that time of the month, portfolio review time. I'm going to share with you all of my holdings, and the aim of this is to share with you, as I build a portfolio, the bad things that I've done so you can avoid them, but also some of the good things that I've done which may help you as you build your portfolios. So we're going to start the show by rolling the intro. So here are the 5 areas I'm going to share with you today. So previously, as a reminder, we're at 41,000 and the new value of the portfolio is just below 41,000. So we've had a reduction of around about £500. Note no deposit, that's 2 months in a row with no deposit. I'm aiming for 300 a month. I have got that money, but I just have not yet decided which ISA provider to use. Be very grateful for your opinions on that subject. The very long-term goal remains. I want to get to £1 million by 2050. This regular series will chart my progress towards that, and I need to be getting towards 46,000 by the end of this year to be on target to hit it by 2050. The rate of return that I require is 9.83% to get there by 2050. It's below the 10% when I originally started, but not that much further below. So I'm roughly speaking, keeping pace with the run rate. In terms of best practice, as general information, general guidance, I'd very much advise you to measure your run rate against your goals. It really gives you an idea of how you're doing, and it becomes more important the further you go in, because if you're behind the run rate, it gets much harder to catch up. Quick shout out to these 3 gentlemen who have been supporting the channel via Patreon. Really helps me keep these videos going, so thank you very much. Here are the dividends I received, really healthy for Aviva. Bigger month overall for the dividends. So that is a very solid month of over £100. Very happy with that. So move on. What I've been up to in the last month. I've sold my holding in Argo Blockchain. Very small holding, and it was really pointless holding it in the end. I've simplified my portfolio after £100. That's how small we're talking. Sold my position in Micron, which was around £1,000. It's actually up on the stock, single-digit percentage profit, and it's not in my top 20 ideas. It's not even my best cyclical. I've removed that position from the table. Very small profit as it moved up quite a bit last month. And I've also sold my holding in 91. Again, under £100. I've got these shares as a result of action with Investec, and I don't intend to add that position. I've taken that position out of the table, so that's 3 positions closed in the month as I continue my journey to a smaller portfolio in terms of number of holdings. The reason for that is it'll be easier to manage. As Terry Smith said, more on Terry shortly, in his book Investing for Growth, there's some interesting information around diversification. Once you get to 20 to 25 positions, you've got almost all of the benefit of diversification. Marginal gain having more positions than that, for diversification purposes, is negligible. So I'm aiming for 20, max 25 positions. I've added a new company, so I'm net 2 down, Williams Sonoma. That's about 1.5% of the portfolio, and they've gone into my quality company box. The usual monthly addition of £100 into Fundsmith as I grow that position every month. Added a little bit more on Aviva, £100 to that. And I got a good opportunity as Skyworks pulled back significantly to add to that position. One of the regrets, I didn't buy enough when I opened the position. It was only £300 or so. Added another £400 to that position, and if it drops off further, I will consider adding more. So very happy with that addition. Now here is my portfolio overview. About 8,000 in cash, that's 20% of the portfolio. Certainly I wouldn't want that to be so high in the long term. I'm not rushing in and buying companies, so I'm consolidating the positions, and I'm also waiting for those very high quality companies at a fair price. My quality company bracket is around £10,000, that's now a quarter of my portfolio. I wanted to grow that pot, and the dividend companies and the managed by others, just over 20% each. Overall, it's moving in the right direction, but still got quite a lot of work to do to get this exactly where I want it. I'll now take you through a presentation of every single holding and the performance of each of those holdings. So stay tuned because some of your companies may be here. And we'll start off with the quality companies, the largest part of the portfolio. And one of my favourite, Bankno's OK, around about 50% up on that, still has quite a lot of upside. A good month for Dropbox, now back to profit on that. And Google's Chargeable at 17% up this month, so 30% up. And I think I only started adding this from the last 6 months. You leave a strong holding, solid. Adobe's done quite well as well, now back into profit on that one. Quite a new holding. There's Skyworks, now 1.5% of the portfolio. Same for Reliance Sonoma, it's a new holding. Trading company Kelly Partners. And Berkshire Hathaway, 71% in 3 years. Very solid. Not a good month for InMode, but still up slightly on that one. Love to add to my Visa position if it was a good entry point. Now on to dividend companies part of my portfolio. Unum being the largest, excellent return for that in 3 years. I love these boring companies. Speaking of boring, here's Aviva. Not a great month, which is why I added a bit more. It was a good opportunity. Legal in general, some nice dividends on that one. Great month for Investec, but it's still done well for me in 3 years. I'm mulling what to do with BT. It's not in my top 20 to 25. It's likely to be sold at some point. Month for British American Tobacco, but a good dividend stock though. And City's down, not surprising given what's been happening in the American banking sector, like for US Bank as well. Disappointed plus 500 in terms of the market view of its price. It's done really well as a company. And let's hope we get this dividend back from Direct Line. Really well, most of these dividend companies. We're now onto the managed by others section, mainly trackers, a couple of active funds, my protection in case I fail. And the FTSE 100 is the largest position at 4% of the portfolio. It's Fundsmith again. And that concludes the managed by others section. Now onto companies that aren't in my strategy, but I happen to have them already when I started this strategy. And however, I still think I will make a profit on this. Just take a lot of patience. Corsair makes great products, up 9% a month. Again, confident I won't lose money on this company. And the same with S4 Capital as well, those had a very bad month. Cumulus, that's underperforming. Probably my worst live investment in terms of total return on talent. To the cyclical companies, and we start off with AMR Met Coal Company. A couple of poor months, but they're buying back shares at an astonishing rate, making loads of money. Another coal company, done well for me. Some very small crypto holdings. Thank you so much for watching, but before you go, if you like dividend stocks, particularly if you're UK based and you're looking for a dividend stock for your ISA, check it out over here. Aviva's recent dividend news. You don't want to miss this one. It potentially could be a company for your stock portfolio.